Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 1st of September the 9th 2021. Time is just coming up to 0440, 20 to 5 in the morning UK time. Asian session coming to close, European session firing up, our lunchtime North American session. Right, yesterday, Tuesday the 31st, last day of the month, we had a positive unopposed driver in the euro at plus 59, no backdoor flows, the opposing negative flows mainly coming out the yen at minus 43, out the pound at minus 15, and the dollar was the negative rock at minus 1, activity plus or minus 59. Intra-week then, this is from Monday the 30th, open to about 15 minutes ago. We've got a negative opposed driver in the yen at minus 98, front and back door flows mainly going into the euro at plus 79, into the dollar at plus 55, and the pound is the negative rock at minus 36, activity plus or minus 134. And intraday then, this is the Asian session to about 15 minutes ago. We've got a positive opposed driver in the dollar at plus 47, front and back door flows mainly coming out the yen at minus 39, out the pound at minus 25, and the euro is the positive rock at plus 17, activity plus or minus 64. So yesterday basically we had potentially a peak in the euro complex as it was a positive unopposed driver, and so really, as you know, this week we've been looking for a floor in the dollar and by extension a peak in the euro. Monday the opening Asian session, intra-Asian session, we had the dollar as the negative unopposed driver, which is normally indicative of a floor. This is normally indicative of a ceiling, and we're starting to see the euro move back down through the gears. So it's in fifth gear there on the positive. Intra-week it's in third gear on the positive, but not driving, and it's now the positive rock. So it's moving back through the gearbox. Probably going to hit reverse fairly shortly, so we're going to stop it there and write up the flows. Right, we're back, we've written up the flows then. So we've got the euro is strong except against the dollar, the CAD and the AUD. The yen is weak except against the Swiss. The pound is weak except against the yen and the Swiss. The Swiss is weak across the board. The CAD is weak except against the yen and the Swiss and the pound. The AUD is strong except against the dollar, and the New Zealand dollar is strong except against the euro, the AUD and the dollar is strong across the board. So what have we got? We've got dollar strength now in the Asian session to the exclusion of all else, and we've got Swiss weakness to the exclusion of all else. Take your pick in the middle. What's going to knock it about, or what has knocked it about? Right, today we've already had AU GDP, which came in positive, which is not expected particularly, and the China manufacturing PMIs came in soft, less than 50. So you've got that sort of push and pull there. We've got German retail sales today coming out, and US ADP employment data, which is a sort of forerunner to the NFP on Friday, non-farm payrolls. Right, so we'll stop it there and we'll write up the asset classes, and then we'll do the final analysis. Right, we're back again. We've written up the asset classes. So the US dollar index basically has been chunking higher. It had a double top, then it went broke, it's come back, it's now 0.26 from the high, so it's come off about 25% from the modelled high. Gold won't like a strong dollar. It's been basically coming down, but it's 0.43 from the high, 43% from the modelled high. Oil is at half marks, so that's where oil is, having had a fairly wide range. Wall Street basically is just sub highs. S&P is at the highs, tech is at the highs, so equity strong. US 10 year then, we had this is the price, big thump down in price, rising yields, went right back up again, hit the previous resistance, So that means yields were at their weakest. Now we're at 0.5, we're at half marks. The price has been steadily dropping yesterday, and we've got a strengthening, significant strengthening in US yields. The bund, which is the other side, the European side of the story, basically is at 0.4 from the high. So you've had a strengthening up in European yields, but the US yields are now overtaking them in relative terms. So you're getting this crossover, and we did have the opposite effect there. Excuse me. And we had strong euro dollar. Excuse me again. So this is indicative of what we're looking for. This is indicative of a floor in the dollar and a peak in the euro complex. Copper then big chop, big break, then thump right down, and we're now at 0.40 from the high. So it's 40% from the modelled high, soft but coming back a bit. US steel, basically it broke after a lot of messing about. It's now 0.40 again from the high, so 40% from the high. So let's just get rid of this and then do the final analysis, and then try and work out what's going to happen today. As you know, we've got ADP coming out, German retail. Is it retail sales? Yeah, German retail sales. Right. So right. Dollar, euro, yen, pound. So we've got German retail sales. Now, yesterday the euro data was strong. It kept the euro higher, and we thought we might have got the floor in the dollar yesterday, but the data noise basically kept the euro from dropping off a cliff. Now we've got this US 10-year rising yields, not yen, rising yields, giving us a clue. On Monday we had this the dollar acting as the unopposed negative driver, often indicative of a floor. Today we've got what was it? Let's just have a look. Yesterday we had the euro acting as the unopposed positive driver, so also indicative of a top in the euro and a floor in the dollar. As I said, this probably would have happened yesterday in the North American session had it not been for this positive previous European data that just kept coming out positive, basically. So we're looking for a reversal in the dollar up. Euro should be doing the opposite. Equities. If you look at the commodity currencies, we've got a weak CAD, a strong AUD and a strong NZD generally, and the Swiss is weak across the board, which is quite a good indicator of risk on, risk off quite often. And the yen is weak apart from the Swiss, which is even weaker. So we've got likely to have a negative equity transmission. So you're going to get yen weakness via the equity transmission. So you've got flows going into the dollar, out of the euro, neutral to out of the yen, and therefore the pound is likely to be neutral, really, because it depends on who you're talking about. It'll be strong relative to the euro but weak relative to the dollar, so it's going to be a bit of a question mark there. But the driver is going to be likely either the euro decline or the dollar rise. So that's where we are. I hope that was useful. Thanks for watching, and I'll see you tomorrow for the daily briefing. Thank you.